I appreciate the last tour being more than thorough, taking a little bit longer, but that's okay. The only negative implication is it bites into happy hour a little bit, but the night's open-ended, so I don't think that'll be too big of a problem. All right, so this presentation, let me set this the right way. First of all, I agree with everything that I'm about to present. The reason I say that is that most of the materials, they're all the slides in this deck are sourced, right? But I really derived most of this from a presentation that I heard from Frank Holmes from U.S. Global Investors. So I'll tell you a little bit about that. But there are some people in the world, Frank being one of them, that have a very, 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 very strong grasp on what's happening. Right? You get a lot of people who are gold bugs. You got a lot of people who jump on the bandwagon, and then you have people who have been understanding these super mega trends for at least 7, if not 10 years. Okay, and these are mega trends that are changing the world, and you can't really predict or understand them by any analogical means. Right? Analogical meaning. Not logical, meaning not by cause and effect, meaning by analogy, meaning by comparison. So people who run charts and follow charts and just look at history, right, don't have sufficiency to predict the future, right? So these are people who go beyond just looking backwards, but they look forward and they understand what's happening in the world. When Frank got up in front of us in Vancouver, the room was half full. In part, they weren't talking about the Comstock, so the room was half full. And what he told us was, 3-4 years earlier, when gold was at $500-600 an ounce, the room was packed. So apparently, some people think we've topped off at 1,500. Right? Fatal error in understanding what's happening in the world. Oh, it's a historical high. History is now not relevant because there's changes in the world that are unprecedented. So that's all fine to say as general conjecture, but Frank is empirical. So he looks at all the data and he points out things that are extraordinary. And so we're in a super trend. We're in a super S-curve. We're in a situation where China is in the 11th year of a 25-year cycle. People are talking about 20-year bull markets, okay? We also have some very serious structural issues with the economy. I'm going to show you a short video as well as part of what we're doing. So I take these to be opinions of a smart man, data supported by some very smart people that I fully agree with. But the idea here is not to impress any thoughts on you, but just to provoke thought. Just to provoke thought so that you'll think about things in a little bit of a different way, and maybe we'll have some more in-depth conversation about what's happening in the world. So U.S. Global Investors, as I mentioned, right, is a fund run by CEO, Chief Investment Officer Frank Holmes, and he presents the question, where the hell's gold going? But his question is not, will it hit 2,000? Right? His question is, are we talking about here, 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 or beyond? Right? That's the question that he's posing in the presentation. His funds, as I mentioned, right, are very heavily invested in resources. And they've ranked, right, 4 of the funds have ranked at the top of the scheme for a decade. Right? So anyone can talk about what's happening in gold and silver today. But it's the people that were talking about it in 99, 2000, 2001 that have made an incredible amount of money. Right? Because they were looking forward. Right? Those people are still looking forward. Right? And still understanding things from a very, very different way. I think their fund had 27 awards. 27 awards last year, and Fidelity had 3 in the same category. Right? And after John Winfield introduced me to Frank Holmes, and we got to talk for 10 minutes, the first thing he did was hand us a card with his fund manager and his fund analyst that said, I want you to talk to my people. Okay? Because he appreciates also what we're doing on the Comstock, and we're doing that. So gold's at the top is what everybody's thinking, right? Gold's overinvested. Gold is peaked. Today, fully 0.9% of capital is invested in this metal. 0.9. Before, nowhere near any kind of rational allocation that someone would think would make sense in today's world. Whenever I talk to somebody, I never convince them, I never try to persuade them to put 100% of their net worth in precious metals. 100% of my net worth is in precious metals, right? 5%, 10%. That would seem rational. 0.9% is where we're sitting. Paulson has about a third, about 12 billion of his $36 billion funds.
Is that
in the precious
0.9 or 0.09?
That's 0.9, with just a hair under 1%. Right? It's increased. You see from 04, it's minuscule relative to the total capital in the world. 0.9, less than 1%. There's just no love from the big pension funds, right? Now I got to tell you guys that the entirety of my career has been in cash-producing enterprises that move tons. The only people that I've ever invested in the kind of companies that I've run have been the pension funds. They're the only people that I know. And when I was first talking about coming on board, John's like, well, do you know people that would invest in our kind of company? Well, I know Boston Company, I know Royal Capital, I know Fidelity. Yeah, but those guys don't invest in gold and silver, right? Not yet. Not yet. Right? But we're starting to see a trend where, and these guys they understand cash flows. Right? So these guys are starting to invest in the majors, right? Which isn't the best place, you'll see in a minute, right? To be investing, right? But I know that when we're producing cash, I can go back to these same people, right? So we got institutional funds that only invest in precious metals. Sun Valley Master Gold Trust. They're one of our top 10 investors and the largest investor in our deal in October, right? There's about 25 others between Sprott, Tocqueville, etc., that have yet to invest in our company. This goes way beyond those guys. This is the mainstream. Talk about silver a little bit later, but what drives gold demand? We're going to talk about the love trade, and we're going to talk about the fear trade, which are the two real dynamics in the world in terms of what's driving the demand for gold. The fear trade is broken out into two things. Monetary policy. So you're talking about real interest rates and money supply. And we're going to show you what happens to gold in low interest rate environments. Hint, it goes up. Right? We're going to talk to you about what happens to gold when there's excessive money supply injected into the system. Hint, it goes up. Right? That's what Bernanke's doing for us right now. We're also going to talk about deficits and what that means to the value of gold. Gold is priced in US dollars. We live in a world where the government spends $3.5 trillion a year, but we're only bringing in $2 trillion of revenue. $1.5 trillion of deficit. I get to watch TV once in a while when my kids aren't jumping all over my head, and I watch the Republicans arguing with the White House for 2 months, and they argue to cut $38 billion out of the budget. $38 billion. Right? Now they want to, take some testosterone and try for $60 billion. It's a joke. It's a ridiculous joke. What's even more difficult to comprehend is the magnitude. These are all entitlement programs. Unemployment insurance, Medicare, Social Security, which is going to